So ETFs guys, in the same way that I did an in-depth stock analysis that those of you who are subscribed may have already seen, we're going to do something similar today but looking at ETFs. ETFs are a great way for beginners to get started investing because they come readily diversified, they're very cost efficient, you can dollar cost average over time. That means you just keep putting your money in over time and you don't have to worry about the price at which the ETF is at. And also it requires a lot less research and time from your side. So today's video is all about things that you should look for when choosing an ETF and how to analyze one effectively. So let's get right into it. What's up guys, my name is Johnny. Welcome to Millennials with Money. I upload to YouTube every Wednesday and Sunday, giving you content to help you take control of your money today to create a bright financial future tomorrow. If you like what you see on the channel, I'd really appreciate your help in reaching more people. You can help me by clicking the like button, subscribing and turning on notifications, and make sure you tell another millennial that this channel is where the good stuff goes down. So for those of you that don't know what an ETF is, ETF stands for Exchange Traded Fund. What this essentially is an investment fund which has a collection of stocks and other investments within it. It will most likely aim to replicate one of the world's stock indices, for example, the US stock market, the UK stock market, or it might have companies from a specific niche or sector of the economy. For example, it might hold clean energy companies, it might hold companies that pay a high dividend, or it might even hold video game focused companies. Yes, there is an ETF for that. One of the key features of an ETF is that unlike mutual funds which only trade once a day, ETFs are listed on stock exchanges around the world and they trade at a quoted share price which can move up and down through the course of a market session in the day. Now in the intro, I may have given ETFs the best sales pitch to make them look like the easiest thing in the world. And they are pretty simple and really easy to get involved with. But you do need to know what you're dealing with and what exactly you're investing in. So in this video, I'm going to give you a step-by-step guide of what to look for when picking different ETFs to invest in. So let's get right into the steps that I go through when I'm picking an ETF. The first thing I look for when picking an ETF is its name. Now, a name may just seem like that, a name, but when it comes to ETFs, they are structured very specifically with different parts in that name which will tell you all about what you can expect from that ETF. So I've got 3 examples here that I'm going to walk you through, and I'm going to break down the names and explain what each of them means. So let's have a look at them. So first of all, we have the Vanguard S&P 500 UCITS ETF brackets Euros. So what does this name mean? So first of all, we have Vanguard. Now Vanguard is an asset management company and it is the company behind this fund. So they are the ones managing, whether active or passive, the assets within this fund. Next we have S&P 500. Now the S&P 500, as many of you watching this video probably already know, is the main stock market index tracker in the USA. So we can expect that this ETF may look to replicate the performance of the S&P 500. And there's a way we can check that, which I'll get into in one of the later points in the video. In the next part of the name, we can see this UCITS. Now UCITS stands for the Undertakings for the Collective Investment of Transferable Securities. In simple terms, this means that the European Union has determined that this fund is compliant with its safety standards and that investors investing in this fund are investing in a suitable investment vehicle. And in the final part of the name, we can see Euro in brackets. This is the currency at which the fund will be listed on that stock exchange. So even though the assets of this fund are quoted in dollars, as we can see here, we know that we're investing in that fund in euros. And what I would typically suggest is that you invest in funds in your local currency. So if you're based within the Eurozone, try and invest in funds that are quoted in euros. If you're based in the UK, then try and invest in funds that are quoted in British pounds. 2 other things that I'd like to highlight that are not directly related to the name, but are worth noting nevertheless. You can see that this ETF has 4 letters, VUSA. That is the ticker of the ETF that will help you find it on the stock market. And you can see that it also has an ISIN, that's an International Securities Identification Number. As certain ETFs can be listed multiple times on different markets with the same tracker but in different currencies, for example, if you find a particular ETF that you like, whether whilst researching on the internet or whether looking around on your trading platform, I would suggest doing research based on the ISIN and vice versa, looking for the ETF that you've done research on with its ISIN within your trading platform to avoid any confusion and to make sure you're investing in the right security. Now let's move on to the second example. So we have the iShares MSCI USA Quality Dividend UCITS ETF USD brackets Dist brackets euros. So this time iShares is the asset management company behind the fund. We can see we have MSCI. Now that stands for Morgan Stanley Capital International. Now Morgan Stanley often does a lot of investing research and does a lot of benchmarking and index tracking research on their side. So if we see this in the name of an ETF, then it most likely means that that's based on one of these Morgan Stanley indexes or benchmarks. And following on from that MSCI, we can see USA High Quality Dividend. So that suggests that the stocks in this ETF are ones that pay a very nice high dividend yield and that they're also based on Morgan Stanley's high dividend yield index. Again, we can see UCITS. So this is an EU safety standard approved ETF. Then following on, we can see the USD not in brackets. Now that relates to the assets in the fund and how they're measured. So asset value of the fund is measured in USD. However, as we can see in brackets at the end, it's quoted in euros. And we can also see that it's listed on one of the German stock exchanges. Let's go back to the Dist in brackets. Now this relates to dividends. So if you see Dist, then that means that this ETF pays a dividend to any investors that are holding that ETF. So yes, you can hold an ETF and get paid dividends, something nice that you can take advantage of there. Now let's move on to the final example. So we have the Lyxor CAC 40 daily -1x inverse UCITS ETF ACC Euro. So I think you'll be getting the idea of how this works now. So Lyxor is the asset management company behind the fund. The CAC 40 is the French top 40 companies. That's a stock index in France. And daily means that this is tracking the daily movements. Now this is where it gets interesting. So we can see a -1x inverse. So this is what's called an inverse ETF. And it means whatever the stock index that this is tracking does, this ETF does the opposite. So if the CAC 40 goes up 2% in a day, the ETF goes down 2%. So this might be an ETF that you buy if you want to short that particular index, if you think it's going to go down and you want to try and make a profit from it. You can also get what are called leveraged ETFs. This is where the movements of the index are multiplied by that factor. Let's assume this time that that number is a -2 instead of a -1. In this instance, if the CAC 40 went down 2%, this ETF would go up 4%. So you can see that not only would it be an inverse ETF, but it would be leveraged and the gains or losses would be multiplied by 2. You should be very careful though if you choose to use these kind of ETFs, as they're not really made for long-term investors. Now here we see ACC. So in the previous example, we saw Dist. That means that the fund pays out a dividend and pays that dividend out to the investors in the fund. ACC means accumulating, and it means the dividend is reinvested back into the fund. So although the investors in the fund do receive the dividend, it means it's invested directly back into the fund. That in theory could provide bigger gains and bigger wealth growth over time as a result of it being automatically reinvested. Now we've got to grips with the way ETFs are named, we'll need to go onto either the fund manager's website to have a look at the prospectus and the summary of the ETF, or we can go on a site like Morningstar or Yahoo Finance, which will also give us the breakdown of that ETF. And no, you don't need a premium Morningstar subscription to be able to do this. You can do it with a free subscription. So the next thing you want to do is you want to look at the return of the ETF over its history. What kind of returns has it provided to investors over the years? And what you'll often see on these sites is the evolution of a theoretical €1,000 or €10,000 investment, for example, over the period of time. And it will show you what the result is at the end. But what I also like to do, for example, if I'm investing in the S&P 500 ETF, I like to take a look at the S&P 500 in Google or in Yahoo Finance and just check that those graphs look aligned. That's to say, does the S&P 500 ETF returns follow the same graphical movement as the S&P 500 index has in real life? And as you can see in this example, that is indeed the case. Now, you can't do this for all ETFs. If you're investing in a specific sector or industry, it's unlikely that you'll have something to compare it to. But going back to the MSCI example, if an ETF has MSCI in the title, as we said, then it often means that it's based on a Morgan Stanley benchmark or a Morgan Stanley index. So you can always try and match up the ETF graph to the Morgan Stanley index and see if it looks the same. Taking the example here of the world ETF, we can see that yes, that is indeed the same graph. The third thing you want to do is you want to look at what's inside the ETF, what components are inside it. So it's really important to understand what are the geographies that make up that ETF, what are the sectors and industries that make it up, but most importantly, what companies are inside that ETF, because that's essentially what's going to be driving its performance and its returns. And it's really easy to find that on either Morningstar or on the asset management company's website. When you go on Morningstar or on the asset manager's website, there'll be a section on that ETF where it gives you the breakdown of the portfolio. Normally, they'll give you first the top 10 holdings in that ETF and the percentage they make up of the total, but you will be able to see that full listing of assets inside the ETF should you want to, and I suggest that you do check out that full list. Similarly, you can have a look at the geographical breakdown. So if we take the Vanguard World ETF, we can see that although it's a world ETF and it does have some Europe, some Pacific, some emerging market stocks, that 60% is still made up by US stocks. So that gives us a good investor that what goes on in the US stock market and the US companies in that ETF will be the main factors in driving the performance of that ETF. Another reason you should pay close attention to what is actually in the ETF is that names can actually sometimes be misleading. To give you an example, I found an ETF by iShares called MSCI Emerging Markets Islamic. Now I thought this must mean companies based in the Middle East, such as Saudi Arabia, the UAE, Qatar. However, when I actually looked at the investments in that ETF, it turned out it was emerging markets from around the world. There was some Chinese stocks, Brazilian stocks, Korean stocks, Russian stocks, and actually the Islamic part of the name was actually referring to the fact that it was compliant with Sharia principles. So yeah, do pay close attention to what is in the ETFs, as names can be a bit misleading and it's easy to misunderstand sometimes. The fourth thing you want to look out for is fees. Now, you won't see fees directly as you invest because they're already factored into the net asset value of the fund. Nevertheless, that is going to have an impact on your returns as an investor. So ideally, you want to keep a low expense ratio where possible. It's difficult to give a concrete range of fee percentages that you should aim to fall within, because you have some ETFs which do give good returns but are very low cost. But then on the other end of the spectrum, you may have a particular niche ETF, for example these high dividend yield companies, but the expense ratio may be a bit higher because you might expect better returns from that. One way to maybe get around this is to compare ETFs. So perhaps compare two S&P 500 ETFs, look at if they're the same, and then look at the expense ratio. That might help you decide one way or another. And you can do the same for sectors of the economy. You might find some comparable funds in terms of either sector or in terms of returns. And then you can check out whether the fee expense ratios align or if one is higher than the other, and that might help you make your decision. Another thing that can affect expense ratios is active versus passive management. So actively managed ETFs have a fund manager, so a human being sat behind a computer who's making adjustments to that portfolio. So of course he needs to get paid, he's got expenses, so that's going to be factored into the ETF expense ratio, of course. However, if it's a passively managed ETF, where it's managed by a computer, for example, then of course the expense ratio can be a bit lower.
So Johnny, it seems like you've gotten to the part of the video where you finished your analysis. In your stock video, you said that you were going to create a trading 212 euro stock pie. It seems like you might do the same thing with ETFs.
Oh, you read my mind. Yes, I am going to create an ETF pie on Trading 212 as a result of this video, and I will be sharing that with you very soon. Though I haven't yet decided the specific ETFs that will go in that pie, the guide that I've walked you through in this video will be the vetting process for me to pick those ETFs. So make sure you stay tuned to this channel, don't miss that video. Click the bell once you've subscribed to get notified. That's the best way to find out. Also, if you have enjoyed the video, if you've learned something, why not leave a comment down below? Let me know which ETFs you like looking at. Let me know if there's a particular process for picking ETFs that you follow. Myself and the community would love to hear your thoughts. That's all from today's video. I hope you enjoyed it. Be sure to check out the Millennials with Money social media and internet pages, and also the other videos on this channel. I'll see you on the next one. And let's get this money.